think about buying a home, you probably focus on two big numbers: the purchase price and your down payment. But there's another major expense that catches many first-time buyers off guard: closing costs. Today, we're breaking down what closing costs actually are, how much you can expect to pay, what's included, and how you might be able to save money. If you're preparing to buy a home or even just thinking about it, this is something you need to understand before you get to the closing table. Let's get into it. Buying a home isn't just a transaction between you and the seller. There are a lot of people involved in the process, like your lender, real estate agents, appraisers, home inspectors, title companies, and attorneys in some states. Each of these parties provide a service, and each service comes with a cost. Instead of paying everyone individually, these expenses are grouped together into one lump sum payment called closing costs. And they're due up front when you finalize your mortgage and officially take ownership of the home. For many buyers, closing costs combined with the down payment are one of the biggest barriers to home ownership. Closing costs vary based on several factors, including the home's sale price, your loan type, your lender, and the state where you're buying. But a general rule of thumb: closing costs typically range between 3 and 6% of the home's purchase price. Let's look at an example. If you're buying a $300,000 home, 3% would be about $9,000. 6% would be about $18,000. That's in addition to your down payment. And yes, these costs are typically due at closing. That's why understanding them early is so important. Now, let's walk through the most common fees you might see on your closing disclosure. Not every buyer will have every single one of these, but it's helpful to understand the categories. Application fee. This covers the administrative work required to process your mortgage application. Appraisal fee. Your lender requires an appraisal to confirm the home is worth what you're borrowing. This protects both you and the lender from overpaying. Attorney fees. In some states, an attorney is required to review and finalize closing documents to make everything legally binding. Credit report fee. Some lenders charge a fee to pull and review your credit report. Discount points. These are optional fees you can pay up front to lower your interest rate. 1 point typically equals 1% of your loan amount. Whether paying points makes sense depends on how long you plan to stay in the home. Escrow deposit and escrow fees. At closing, you may be required to fund your escrow account. An escrow account holds money for property taxes, homeowner's insurance, and mortgage insurance. You may need to deposit the first couple of months of those expenses up front. There may also be a fee for setting up and managing an escrow account. Home inspection. While technically separate from lender fees, your home inspection is still an out-of-pocket cost in the buying process. This ensures the property doesn't have structural, safety, or major system issues. Homeowner's insurance. Most lenders require you to prepay the first year of homeowner's insurance at closing to ensure the property is protected. Lender's title insurance and title fees. This protects the lender if there's a problem with the property's title, such as undiscovered liens or ownership disputes. A title search is also conducted to confirm there are no legal claims against the property. Origination and underwriting fees. The origination fee compensates the lender for processing your loan. The underwriting fee covers the cost of reviewing your income, credit, debt, assets, and overall risk profile. Sometimes underwriting is included within the origination fee, sometimes it's separate. Prepaid interest. You'll typically prepay the interest that accrues between your closing date and your first mortgage payment. If you close near the beginning of the month, you'll prepay more days of interest. If you close near the end of the month, you'll prepay fewer days. Private mortgage insurance, PMI. If your down payment is less than 20%, you'll likely pay PMI. At closing, you may owe your first month's PMI premium. PMI protects the lender, not the borrower, in case of default. Property taxes. Depending on the time of year, you may need to reimburse the seller for property taxes they've already paid for the portion of the year after you take ownership. Transfer taxes. Some states charge a tax for transferring ownership of the property from the seller to the buyer. The good news? There are a few ways you might reduce what you pay. 1. Negotiate with the seller. In certain markets, you can ask the seller to contribute toward your closing costs. If they're motivated to sell, they may agree to cover part of that expense. 2. Close toward the end of the month. Since prepaid interest is calculated based on the number of days before your first payment, closing later in the month can reduce that specific cost. 3. Review your loan estimate carefully. Compare your initial loan estimate to your final closing disclosure. Look for discrepancies or unexpected fees. If something doesn't look right, ask questions. Mistakes do happen, and reviewing documents carefully could save you money. 4. Compare lenders. Not all lenders charge the same origination and underwriting fees. Shopping around can make a difference. As a not-for-profit financial institution, your credit union's goal is to support your financial well-being, not maximize fee income. Transparency matters. You may have seen ads for no closing cost mortgages. Technically, those loans exist, but here's what you should know. The costs don't disappear. They're usually either rolled into your loan balance or exchanged for a higher interest rate. That means you're still paying them just over time. And because mortgages have long terms, paying interest on those rolled-in costs can add up significantly. Sometimes this structure makes sense, sometimes it doesn't. It depends on your financial situation and how long you plan to stay in the home. Closing costs are a normal part of the home buying process. They can feel overwhelming, especially when you see the total for the first time. But when you understand what they include and why they exist, they become much less intimidating. The key is planning ahead. If you know early on that closing costs may range from 3 to 6% of the purchase price, you can build that into your savings strategy and avoid last-minute stress. Buying a home is one of the biggest financial decisions you'll ever make. If you have any questions about closing costs, loan options, or you're ready to get pre-approved, our home loan team is here to help. If this video helped you, be sure to like, subscribe, and leave your questions in the comments below. We're always happy to create future videos based on what you want to learn next. Thanks for watching.